Welcome back. You got Will and I Man here for the Block Runner, MetaZone, Roby, and MScribe, and today we're going to be talking about Venice.
Little AI update.
Yeah, so this is a combination of AI and crypto combined.
Yes. Yeah, it's been a while. I've seen some like comments. It's like, hey, how about a Venice update sometime, lads? There's a lot happening.
Yeah.
Yeah, I mean, we've obviously missed a lot because you're right. We did some re-exploring. I mean, we talked about it last when it first hit the market, right?
Yeah, so we did a video. We're going to put all the links in the description, and we did it January 2025. So if you look at the chart, it doesn't even go, beyond that.
Right. Yeah, I mean, it was literally at launch, and why? Because a couple of things. Base was kind of heating up at the time. There were definitely a lot of AI experimentation on Base.
Yeah.
And then who was the launcher of this thing? It was Eric Voorhees, which we know.
Yeah.
He's like one of the early Bitcoin OGs, pioneers. Satoshi Dash, X, Y, and Z other involvements in things. So like, wow, he's jumping into the AI space. This is probably something worth following. So if you heeded that advice and maybe you were accumulating along the way, it's looking pretty healthy for you, I would say.
Yeah, definitely. So when we talked about it, it kind of went ham to like 360 million. Then it settled at, bottomed at 58 million. And then now it's at 600 million.
Yeah, it's doing its up into the right thing, dude. I mean, you could probably attribute a lot of factors to it. Just in general, AI things tend to go up into the right.
Yeah.
Maybe not so much so the case like Web3 versions of that. Some things do. Like Potenter has its moments, but it's still largely kind of like crabbing along.
Yeah.
But
still like 1 or 2 billion market cap.
Yeah, still huge. Still a monster in the space. But this one in particular is interesting because it's actually, I guess, achieved what everybody calls product market fit, right?
Yeah, so it's focused on privacy, on prompting your agents or your LLMs. It's all private. So now when you're using Venice, your prompts don't go directly to OpenAI and they don't go to Anthropic and they see, plain text of what you're doing.
Yeah, so there's probably like certain demographics like of who actually cares about that, right? Because you're getting access to the same models, right?
But it's perfect for crypto because general like the people who are in crypto who are about the technology, they really care about the privacy part. That's why they're in crypto.
Yeah, I would imagine so, right? Some people don't want because it's obvious like the government has their hands in these pots, like Anthropic and OpenAI. They're literally, I think Sam Altman just said today, like 5% of OpenAI's like IPO is going to the Trump administration. That sounds pretty fucking weird.
Yeah.
If that's a bribe, I've never seen one bigger than that. But so what does that imply? It's like, well, whatever data you're sharing with these companies, it's in the government's hands, access. So you might not want to do that depending on your own personal ideologies, right? So Venice exists to service you.
Yeah, there's a couple of ways you could do that. So you could buy hardware, run local LLMs within that hardware, or use things like Venice.
Yeah, so it's taken off. So much so to the point where they're doing it, right?
Yeah, Venice AI becomes a unicorn with a $65 million Series A raise for the privacy-first AI platform.
Yeah, I mean, we haven't seen, venture figures like that in crypto in a minute.
Yeah, it's been a while.
Yeah, I mean, for a while it was pretty constant, like back in the 2021, 2022 days. Like every day somebody was raising like that sum of money.
That's how we got like 200 different L2s on Ethereum.
Correct. Yeah, but it's been pretty stagnant since then.
Yeah.
Maybe unless you're doing like a stable coin or a prediction market or something like that.
Yeah, but apparently raising money is not the greatest thing that's ever happened, according to a few people in the community. It says if VCs won't buy the token without getting equity, why should you? It says there are only two paths for token success. Either everyone agrees the equity is worthless and just a front to do business in real life, or the token has claim to equity and can be treated the same. So outside of this, a project needs to do a lot of work to earn trust.
Yeah, so this has definitely ruffled some feathers, which I wasn't really expecting. But I think if you understand the origins and the roots of Venice and like the community that's kind of built around that, I guess you can kind of understand why this would catalyze this conversation, right?
Yeah, I think Eric kind of explains it perfectly here. Anyone has a choice. Buy tokens today, they are liquid immediately. Buy equity today, it is illiquid and has indirect exposure to tokens, which are also illiquid. And it says both options are rational based on the buyer's preference, and indeed VCs have taken both paths with Venice. So their VCs have equity and the token.
So what's the problem then? I mean, the problem comes from people who only have access to acquire the token, right?
That's the problem, yeah.
It's the perception of like, it's WTF, mate. It's like I've essentially put my capital in as well, just like these, you know, institutional investors have.
Yeah.
But I'm not getting the same deal you've given them.
Correct. Yeah.
So like, what gives, right?
Yeah. So that's part of it. Part of the issue is like regulation. It's you have to be an accredited investor to get these kinds of deals.
That is a problem.
So you need to be a millionaire. Basically, that's what an accredited investor is, and then you need to have the network access to be part of these deals.
Right.
So it's two issues, but ultimately, everyone else who's not an accredited investor, they don't have access to this stuff, and hence the problem. But we saw Paul Atkins just did a tweet today, right?
Yeah, well, we should see that soon.
Yeah, I don't know if I added it here on the end.
Oh, you didn't?
Yeah.
Okay.
But we'll talk. Well, so Paul Atkins recently tweeted that these things are going to be changing. So there might be some sort of test that you take to become an accredited investor. That way, everyone knows that you know the risks in investing.
Yeah.
And then you'll get some sort of certification. And then, you know, platforms will develop where anyone can buy tokens and they get basically the same access as accredited investors.
Yeah, I mean, that would be huge. I mean, that would be actually
this
massive.
This is something we've talked about since like the beginning days of the podcast, like 2019 stuff.
Yeah, we postulated the absurdity around like these legacy rules of like SEC involvement and like, who gets to invest in things, and then like, you know, the understanding of like what crypto rails enables. It's like a modern approach to finance.
Yeah, and that's after like 25 years of the internet where people are pretty savvy.
Yeah.
Right. You don't just because you're a millionaire doesn't automatically make you savvy, but that's what they suggest.
Yeah. So who knows? I mean, the rules haven't been explicitly stated what's changing, but they did mention on chain specifically to this statement, right? Here's the statement. Chairman Paul Atkins says the SEC is modernizing rules to bring financial markets on chain. So,
yeah.
So this is relevant.
Yeah. Brian Armstrong is also talking about the exact same thing. So it's coming.
Yeah.
All right. So let's listen to Mippo here. And it says tokens with equity do not work. Hopefully I got the audio.
Hey, everyone. We've got to stop doing token equity splits. We've just got it. It's 2026. We have hundreds of thousands of data points to support this. Nothing on a 5-year time horizon is up. Most of the stuff is down 90, 95%. Even the best tokens that have an equity structure that have been around for a long time have hundreds of millions in revenue. They're flat. They're flat. And the reason that they're flat is because there's this imbalance. Everything about the token, from the airdrop to what you need to do to incentivize distribution partners at sexes or custodians or whatever, it's all sell pressure. And if you don't have the buy pressure of investors buying the token to offset it, it doesn't work and it's down only. This is the definition of insanity. We have run this experiment not 10 times, not 100 times, hundreds of thousands of times. I don't know what else we're looking for here. It doesn't work. Any project, no matter how good it is, there's no project that's so good that it can overcome this misalignment of incentives. It is impossible to work. It doesn't work. We need to put the nail in the coffin. This thing is done. And we're at a moment in time. You know, the future is not written here. Do we want to keep doing this? Is this fun for people? Do we want to keep running up these projects, you know, for 6 months and then watch it go down 95%? This is not the future isn't written in stone. We can change this, but it means people have to change. We have to update our mental models for the times. And I know it sucks. It's an inconvenient truth. I don't really want it to be true, but I don't see how you could look at this and come to any other conclusion that this is a fundamentally broken structure and we gotta change it. We have to change it.
Yeah, so that's a lot of words. So updating your mental models, I don't know if that's like all that's required here, right? Like it's a combination of mental models and just like actual market viable ones, and then in tandem with regulatory like acceptance of such. Like, and that's not an easy thing to do, right? Like what we're witnessing here is like, I guess like an industry or like an investor base or whatever you want to call us, crypto natives.
Yeah, degens.
Well, yeah, like historically that's what we were, right?
Yeah.
And now we're all of a sudden wanting to
like sophisticated investors.
we want to grow up a bit, right? It's like, how come we can't have access to something that was like natively birthed in our trenches, and at some point could have the potential to pull off like an Anthropic or OpenAI run, which I think this Series A kind of micro signals a bit because it's an AI product.
Sure, yeah.
It has millions of users the way a traditional AI product would. Most of these users don't give a fuck or even are aware that there's like a crypto tie-in to it. So it's like theoretically this thing could be a true unicorn and like we own tokens in that, but really we own nothing.
Vaporware, yeah.
So it's like we're kind of like the suits in our closets are calling to us, right? It's like, you know, like when are we going to get our, I don't know, our institutional grade investment opportunity?
So are we suggesting that tokens represent equity?
I think that's like the demand. It sounds like it, right? Like,
yeah, because it's complex because it's against the traditional trench rules because equity is supposed to be able to expand, right? You issue new shares, meaning there's new tokens, right? And so people need to grow up, right? If that's what you want.
Yeah, it's just like other there's like experimentation on this front, right? Pumpcade, where it's like you have some tokens and then you can exchange those tokens for some percentage of equity, right? Or ownership. It's like a conversion process. But then you're like exchanging something that's very real-time liquid for something that's not, right? It's like, and it's a determination of whether you want that trade-off. An experience, right? I don't know.
I think we got to run the experiment. I mean, how else can you find out, right?
Yeah.
You gotta. Okay, so we got another tweet here. Is the Venice raise and the team, real companies with real revenue and real products and real leaders raise more to scale. So what are we expecting? They just make the token a security and funnel all equity purchase into the token. So basically, this is just like the thesis of making the token into equity and applying that to I guess like a framework for Web3 projects to leverage, raising capital and allowing regular people to take advantage. All right, so this is Venice. So let me scroll all the way to the top here. So Venice, like you're saying, it's like a traditional kind of like use case, right? You just like prompt your AI and you get your output. The difference is that it's completely private.
Yeah.
So it says text generation, chat, reason, write, build with powerful open source language models, uncensored and private.
Yeah, so they're not like pioneering models themselves here, right? That's not what Venice does.
Yeah. Venice
integrates like pioneering frontier models, whether it's, Opus or, Fable's coming back, right? So assume Fable, if not already, is going to be integrated here. Maybe.
Probably not
maybe
because
not.
You need KYC.
Right. So maybe like these new government impositions like actually put like a real wall to this whole privacy thesis.
Yeah,
potentially.
But China's right behind Fable in terms of
their
LLM. So
so they won't care.
Yeah.
So these Chinese models will come in here to like save the day at some point. But nonetheless, that's kind of the idea. And this is what I mean by
you don't see this little widget here on Web3 projects.
Right. This is the stench in the room that I'm talking about. And this is why token holders feel some other type of way. It's like, hold on here. These guys are making real revenue.
Yeah.
They're making real bucks, not like internet fun bucks, These are real bucks here, I'm seeing.
Yeah.
And they're making a lot. They're making, I think their ARR is like in the hundreds of millions. Like that's a true success in our world, right?
Yeah. That's huge, right? That's like
huge.
That's like Pump Fun and Hyperliquid.
Right, but Pump Fun is like a $1 billion corporation that it's made or had success through like a crypto native thing, I guess.
Yeah, you're saying this is both sides.
It's like a crypto native thing making profit from like
Web2
from like actual humans, not trenchers, not degenerate gamblers, speculators, whatever. It's like they're just offering a service to the world, and it hits.
Yeah.
But there is a complexity of like token dynamics deeply entrenched in all of this, right?
Yeah, it makes sense. All right, so can any Venice bull explain why Diem even exists? It feels like the financial engineering to pump the VVV token, and 38,000 DM supply equals 14 million per year in compute obligations, which is roughly $1 per day each at 100% utilization.
Yeah.
Yet using DM, Access Compute injects zero new cash into the company, unlike pro subscriptions. Yeah. So if they're ever light on cash or want to scale infra, they'll likely have to sell the VVV to cover it, and then the 20% staking emissions cut they take from DM mentors feel like a proof that they know it's a real liability. And then Eric Voorhees comes in and he says, yeah, this is a liability. It's constrained because supply of DM cannot raise materially. Doing so would lock exponential amount of the VVV token. So he goes in pretty in depth here.
Yeah, it's just so this is what's kind of morphed since the last time we talked about Venice. I don't think DM was part of it back then, a year and a half ago. This is like, again, this is what happens whenever you're trying to, kind of brew a product and align a community and ecosystem around a token. It's like things tend to complexify, the longer you run this experiment, right? It's like, okay, we got this token out there. It's like, all right, if you go back to the chart of the token itself, let's take a look at what it did. So it pretty much went only down for about a year, right?
Mm-hmm. Yeah.
So what do you do in that situation? It's like, oh shit, our token just keeps going down. Time to engineer some new flywheel or some new incentive staking, whatever the fuck.
Yeah.
Some magic.
Yeah.
To get people to stop selling this damn thing. Oh, I know. We can issue like Inference redemption, credits.
Tokens. Yeah.
Yeah, tokens. As so long as you lock up the main token, right?
Yeah. Yeah, and he refers DM as like part of like expenses. Like you have marketing expenses and stuff like that, and DM is one of those.
So it's essentially an expense, like, as they have to foot the actual bill here, like for when people redeem this Inference credit.
Yeah.
That's real compute that has to be purchased from the actual providers, right? And so they're footing that bill to service their users. So that's a cost incurred on them. But again, it's all to uphold the value of VVV, which matters to them, I guess, and their investors, right? Because that's part of their treasury, right? They want that number to go up.
Yeah, I mean, all of it was part of an experiment, so why not do the test, right? Yeah. So I think it's totally fair. All right, so this is the DM token. It has a 50 million market cap. Let's look at the daily chart here.
Yeah, so there's only 38,000 of these, so each one's like $1,300 roughly.
Yeah.
Which is pretty wild. So like you have to, and the way the DM is issued, it's like it gets like exponentially more costly from like a VVV perspective in order to like, I guess, emit one of these tokens.
Mm-hmm.
So it's a very complex dynamic, but it's introducing something that I think is more interesting than the actual, token emission mechanism. It's the introduction of, commoditized inference.
Yeah.
Right?
Yeah.
Yeah, which is going to lead into a lot of things that we could talk about in the future.
Yeah, which is something that, we need to look deeper into because, we have our own AI product and we need to like leverage these commodities.
Right. Yeah, because the thing this does is it gives people now the ability to, buy and sell these things, right? And that can be, depending on who needs it when, or like who doesn't need it, like that determines like an actual value to the thing.
Yeah, absolutely. Yeah, so there's a supply demand dynamic there. All right, so then we're going to put this link in the description as well as give me a summary of DM. So if you want to go deeper into DM, just read the summary here.
Or just ask your own little
ask your
AI
agent.
buddy.
Yeah.
Yeah, it's pretty common practice these days to understand things.
All right, so from Mac here, the combined economics of Venice and Surplus are really interesting. So there's another interesting dynamic between these two organizations. So Venice has a token, DM. The gray line equals the total yield, which is 365 divided by the DM price. But on Superintelligence, DM holders can resell these credits, sell their yield to Inference buyers. So sellers choose the discount they offer to buyers. Higher discounts mean more of the yield goes to the Inference buyers, and lower discounts mean more of the yield materializes for Inference sellers. Mm-hmm. So the supply and demand mechanic. So now you can I guess, chat with your AI at a cheaper cost if you bought DM at that discount. Mm-hmm. So very effective, kind of useful like tokenization here.
Yeah, I would say so. I think it's another brewing or budding use case for why crypto matters in the context of AI, because you can permissionlessly form markets around these new age commodities, right? People like to say inference and compute, like all this stuff, it's the new oil.
Yeah.
It's like the most valuable resource on earth now, to the point where people are like, they're no longer raising capital to like start businesses, or they're being paid in inference. Like OpenAI, I think they have like an investment arm, and like they just give you access to inference as like a a funding check.
Yeah.
Why? Because it's so valuable.
Yeah.
You could do so much with it. Right?
Yeah, I mean, I feel like that is like another form of like a commodity, is that the whole ability to leverage like these tokens, to convert those tokens into intelligence.
Yeah.
And so anybody could take advantage of that. And so somebody has to pay for that cost.
Yeah, so it's again, so a new brewing market is forming around this. So we'll talk about those projects here in the coming weeks. Because, yeah, we have interest in understanding how all this is kind of formulating. Because, we have an AI native platform in Nat.fund, the Vibe Studio in there. It communicates through these rails. And if there's like an ecosystem brewing that can, reduce the cost.
Oh, yeah.
That's
a no-brainer.
That means something to us.
Yeah.
Right?
So this is becoming the biggest narrative of the next bull run. It says it's not about AI. It's not about robotics. It's not even tokenized equities. It's you got to think broader. It's on-chain startups, which encompasses all these narratives that we love and the aligned incentives between the team and the token holders. And then real builders tokenizing an innovative idea, raising capital from the market to bootstrap, achieve product market fit, and then allow early supporters to get exposure to the underlying business, which is real revenue, innovation, and business. So that's how crypto goes mainstream again. So yeah, I feel like the combination of like real revenue, like real people using your real products, and then combining that with token incentives, like it's just that's the whole point of crypto.
Well, it hasn't been.
It hasn't been, but that's always been like.
Yeah, it's always been. It's been the inverse, right? It's like, here's a token.
Yeah.
Let's raise a bunch of money for this token, then we promise we'll deliver something.
And then hopefully we'll generate some revenue.
Maybe.
Yeah.
So then token starts at $1 billion valuation, and then just number go down tech.
Right.
And yeah, we're exhausted. Clearly, that guy who was speaking there, he's like about to lose it. Yeah. And that's how everybody feels. Like, again, we're gonna just keep doing this. Well, maybe this time it's different because it's actually attached to a business that's actually thriving. So maybe it'll work. But if not, then we got to figure out some new paradigm here.
Yeah. Okay. Yeah. Let's call it here. So we've been talking about Venice, privacy, and the DM token. So if you guys have any questions on what's going on here, please let us know in the comment section below. And if you find anything interesting that you want us to talk about, please also add it in the comments. Appreciate you guys for watching, and we'll catch you in the next video.